Hello, everyone. JR with Secure Metals with your quick analysis here on both gold and silver. Today is Tuesday, May 28th, 2013. It is 10:32 p.m. Eastern Standard Time. So this is your gold chart versus Dow. I've shown these charts here a few times, and I wanted to do another quick analysis here on this. So gold and the Dow Jones really moved together. So this is a chart going back to 2005, actually March of 2005, and we'll see that anytime you see the Dow hitting a high, we'll see gold hitting a high as well. So you see this here, okay, and then we see this here as well. So again, as gold goes up, so is the Dow Jones. As we see gold go down, we see the Dow Jones go down as well. So some of these highlights that I have here are really a divergence when they began and when they ended. So I wanted to take a quick look at this here. See this line here, just really comparing the price action, how both gold and the Dow is going down. And over here, I've made different lines. So these lines here is the actual divergence. Now, these green bubbles that I have highlighted here, this is where we saw the divergence begin. So you saw gold began a rally, and actually the Dow Jones began a sell-off. Okay. Now this divergence, once it ended, it actually didn't end here. It actually ended here. So if you notice right here, gold goes down as the Dow Jones correct from this big fall. And then again, another big move to the downside. Gold actually went up. And this is where the pairs met again. And then they both started falling together until we found a floor, both for both gold and the Dow Jones. This was back in 2008. And ever since 2008, really been trading together. And back in 2011, roughly July of 2011, we saw another divergence. So this time, what we saw was the first time we saw the Dow Jones sell-off and we saw gold rally. This time we saw another Dow Jones sell-off, followed by, well, actually with a gold rally. Then roughly here, roughly sometime in December. So roughly this lasted roughly about 6-7 months, and roughly in December of 2011, then price action met again, and again as the Dow Jones. By the way, I'm pretty sure you all know by now, but the blue gray is the Dow Jones, and obviously the red and green is the gold price. I think I should have told you guys that before, but at any rate, so here we have when the price action met again, and again as gold corrects from this huge sell-off, the Dow Jones also goes up. Obviously, the market comes back down, and up until here, this was roughly in November of 2012, we saw another divergence begin, where you saw gold rally up a bit, and we saw a little bit of a sell-off here on the Dow Jones, and this was really the beginning of a huge rally here for the Dow Jones, and obviously a beginning for a huge sell-off on gold. So really, as of right now, I am expecting, I've said it before, I am expecting a floor roughly around here. The Dow Jones came down here roughly to this level here, so we might see gold test these lows again, though I highly doubt it. I really think we have found a floor between the probably $35 level all the way down to the 1300 level. But again, this really is a great time for me, if you ask me, to continue to accumulate. But again, you would expect this huge divergence, really the biggest divergence I've seen here. And besides this one here, when we saw gold go up. Now, back when we had that Dow sell-off, we obviously went through the housing market crash and the beginning of the Great Recession, as they're calling it. And this time around, really no economic fundamentals to support this rally here. And again, I don't think anyone can say why such a big sell-off here on gold. But again, we do know that this is a divergence, and this time the way I would predict is going to play out. I'm going to predict that gold is going to find a floor here sometime in the next several weeks. Rally back up to the $1,500 level. The Dow Jones would have to come down to at least 13,000. A pretty decent sized correction. The metals and the Dow would then meet again. I can't call where they're going to meet, but you would probably say somewhere in the middle. So maybe when gold hits 1,500 or so, and then you'll see this start to rally again together. And I do expect much higher prices on the Dow Jones, as well as expect much higher prices on gold. The question is, how long is this Dow Jones rally going to last? And I can tell you that interest rates are being kept at close to zero. There's really no economic fundamentals backing up the Dow rally. 15,500. I mean, again, with no economic data supporting it, it's just really a no growth environment, and you have Dow Jones and S&P hitting all-time highs practically every day. So I'd be very, very, very cautious. And again, we want to be smart about what we're doing here. You buy at the high, you buy at the lows, and you sell at the highs. And really, that's really a shift that I would expect here in the next coming weeks. Maybe the Dow Jones will continue to 15.7, maybe even 16K. Now, another thing I'd like to add is the duration here of these divergences. The first one here, it was roughly 7 months. Actually, a little bit longer. Let me take this off because the divergence really didn't come to end here until roughly this section here. So roughly 11 months for that divergence. And of course here, let me see, the next divergence we saw from here to roughly, I want to say somewhere around here, and that was roughly 5 months, so really half. So if you're going to do an average, obviously you'd look for about a 7 month, anywhere between 7 months. So it could be a little bit, so it could be a bit more, maybe around, I would probably say again, between 7 to 8, 9 months that we're looking for this divergence to end. And roughly probably somewhere around there is when you're going to see these prices come back and marry. But again, doesn't necessarily mean that it's bearish or bullish for the Dow and gold. It just really means that, again, the divergence can continue. So we can see a little bit of a correction here for the Dow, and continue to see a big move here on gold, or continue to see an upward move on gold before, again, prices combine, again, continue to go higher. So onto the gold chart here. This is your gold daily chart here. As we can see here, it looks like we've seen a double bottom. I guess we'll see confirmation here if this 20-day moving average does not hold as resistance. If this continues to go up, then obviously we saw double bottom, and we would expect to see prices test at least the $1,500 range. Who knows, possibly even higher. Try to test this 100-day moving average at around 1,550. But again, as of right now, stochastics are moving to the upside. If this is the channel that we're looking at, which fit perfectly with these two highs, then we would expect this price to hold at this line and to find some resistance here roughly at this line. Again, if we're looking at the Fibonacci retracement from the drop, all right, then we have 61% Fibonacci, which we've already tested that level here at 1488. And again, we would look to test the 100-day moving average, or test this previous support, now turned resistance, at roughly around 1532, before making a correction back and seeing how we can zigzag our way out of this bearish zone here. And if we're looking at the weekly now, again, let me just point out here. Now, stochastics are moving higher, so again, we can't expect prices to continue to go forward and test this 38% fib level here at 1424, so long as this 20-day moving average doesn't hold us or continues to push us down. But again, stochastics are looking positive and still a good upside potential here as of right now. If we look at the weekly chart, a weekly chart still pointing a bit down, but it does look like it's trying to make up its mind. But really, for the last couple of, for the last 8-9 months, stochastics really have been here on the low side here for the weekly chart. So we are expecting the stochastics to break out of this zone here and go higher, and that's when we would expect to test the 1530 level. For the silver market, really boring price action, guys, for the last couple of weeks. I mean, let me just show real quick here. Let me go back to gold, and we're looking at gold here. This is the daily chart here for gold. So roughly for a week, we've been sitting between 1400. This is the zone here. Yeah, so really in the last week and a half almost, I mean, all we've seen is a bounce from the low from the 1355 range all the way up to the 1395 range, and really that's really how it's been for the last week. So again, until we break out of this zone here to the upside or to the downside, we are very, very much trapped in this very small trading range here. So again, not a lot of action here whatsoever. Again, on the silver chart, also the stochastics are putting higher. We have seen a very, very good support hold at roughly around $22. Again, we did see that flash crash that happened. This was last weekend, the previous weekend, obviously. And we saw another supposed flash crash where silver opened at 22.50, and then within a matter of a few hours came down all the way to 2020. Different sites had the lows at different points. 2020 was one, 2005 was another one, 2075, 2080. So again, with these flash crashes, everything messes up a bit. But these flash crashes are kind of weird to me. I don't really buy it, but if you think the amount of stops that these guys took out and then it just comes right back up is incredible. So again, that in itself is shady. I don't really buy the flash crashes all the time. I mean, we just had one a couple weeks ago where the Dow lost 300 or 400, 500 points within a couple. Not 500, but it lost a couple 100 points within a couple of minutes, and then in 3 minutes it was right back up. So I don't really buy them. So again, a lot of support here around the 22.05 level. I love silver right now. The silver prices are amazing, if you ask me. And as of right now, I mean, you want to call highs. These are your highs. That's a high. That's another high. That's another high. That's another high. And these are your lows. So again, you got to buy at the lows. You have to buy at the lows. I mean, just a great opportunity to buy. And the one thing that I really also like about this chart here is this tunnel here. Now, I really like this channel here. Let me just back up so we can kind of see this a little bit better. I really like this channel. Really nice channel that we have. And it seems to be trading at the bottom of this channel. So again, I really like silver at these prices, again, being that we are at a fairly low level. I mean, we do have a potential to come back down to $21. If this $22 does not hold, and I mean, chances are it's going to come down to the $21 range. As of now, we have stochastics still moving higher, so there is a chance that this can move higher to to test the $24 range again. And possibly even a bit higher, maybe create a new high if it goes over 24.70. Let's do a quick fib retracement here from the drop. So if we do a Fibonacci retracement from the big drop, then what will we got? Yeah, so we can come back here and test the 25-day moving. I'm sorry, the 61% Fibonacci retracement at 25, possibly even 26, 27. But I mean, if I'm looking at this channel, I would say that we're probably going to see these prices, maybe see the $21 prices. If not, it'll take off from here. But I would suggest that we're going to see this line test here pretty soon, maybe within the next 2 to 3 months, and maybe we can test the high 20 range. So again, I really like these prices. Again, especially this tunnel, anytime this trading range here, anytime we've come down here to the bottom, we have tested the upper side of the band here. So I would expect prices to continue to go higher and test this band here around $29, $28, $29. All right, guys, that's it for today. Just a quick analysis. I hope you enjoyed it. Bye-bye.